Morning, Steve Reed in Chicago with the morning grain comments. Grains are a little bit higher. We've got beans up a penny around 8.46 in the July. Corn's up a penny at 3.21 in the July. And wheat is now turned higher near 4.99 plus 2 cents. Stock markets are lower. The dollar's higher and crude's higher. I think in the grains, yesterday, USDA estimated 80% of the corn is planted versus 71 average and 44 last year. Pretty good gains in the western Midwest with Iowa, Minnesota, Nebraska pretty much done planting. The delays are in Ohio, Michigan, parts of Indiana, and down in the Delta. As far as soybean planting is concerned, 53% done versus 38 average at 18 last year. Here again, the west Midwest is ahead of normal, while the east Midwest and Delta is behind normal. The Brazilians have sold a big chunk of this year's soybean crop, and next year their GDP grew at 8.6%, the largest gain in 31 years, and based on big gains in the ags. With their lower currency, farmers there are getting near all-time highs for their soybean prices. Corn crop, 66% sold to date, and 56% of the safrinha crop. Argentina still looking at a 50 million ton soybean crop, 87% harvested. It's rated 21% good to excellent, and their average yields are running around 50 bushels per acre. Argentina corn is rated 36% good to excellent, and their average yields are around 142 bushels per acre. The situation in Argentina, their economy is worsening, and there is some concern that people are going to be watching if it affects world trade. As far as the 2-week forecast, it looks like the eastern Midwest, especially Ohio, Michigan, Indiana, maybe northern Illinois, will remain wet. This pattern, though, has helped crops, especially in southwest Minnesota, parts of South Dakota, Nebraska, western Iowa. Still probably going to be dry in western Kansas, Colorado, and Oklahoma. USDA dropped crop ratings 1% in that area, but did improve crops in eastern Kansas and also in the PNW. So I think that we remain in this trading range with soybeans November finding a lot of overhead resistance, 870, 890, due to the fact that U.S. soybean acres could increase and the supply could increase, and the big unknown is if China's going to buy beans from the United States or not. So it's hard to sell the beans if China buys, and it's hard to buy the beans if they don't, and we get a bigger supply. Corn, resistance in July corn at 325, December corn 339 to 346, and I would think that it would be very difficult for the market to move above those price levels unless there's a weather problem here in the United States. The drop in ethanol demand, and even though acres might be down, a bigger crop will add to the 2021 supply. Argentina's already talking about shipping 3.5 million tons of corn in the month of May versus 2.8 last year. So there's going to be some competition for the exports. Wheat market, on one side, the funds keep selling because the USDA estimated world supply at record high. On the other side of the coin, we do have some dryness across northern Europe and southwest Russia. That could bring the crop numbers there down, which should offer some support near current levels for the wheat market. Again, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.